Hi, my name is Travis Tjepkema, president of Church Casualty Insurance Agency. We're excited this month of March in 2023 to celebrate our 40th anniversary as an agency, and I'm happy to have with us today some great guests, some partners of ours in Church Mutual, Alan Ogilvie, president and eventual CEO of Church Mutual, and Kevin Root, Senior Vice President of Customer Service and Sales with us today. We're going to jump back into these gentlemen in a second, but I wanted to just take briefly a minute to talk about Church and Casualty and Church Mutual and our partnership and relationship. We have, like I've said, we've enjoyed a 40-year partnership. My father-in-law, Richard Riddle, brought Church Mutual to California with account number 1, and 40 years later, we're over 6,000. And it's been a great partnership. We're an independent agency, but we have a unique partnership in that our exclusivity for California religious business, Church Mutual is our number one stop. And somebody said to me long ago, they said, "Travis, why do you have all your eggs in one basket?" And I said, because I got a really, really strong basket. And so we've appreciated that. We've appreciated the strong basket, the financial stability of Church Mutual, the longevity of Church Mutual, and that relationship. And we really appreciate you guys taking the time to come out here and celebrate our 40th together. And spend some time talking about the insurance industry, Church Mutual, California, the nation, and what's going on. So with that, I'd like to start with Kevin. Kevin, just kind of give if you could, how 2022 went for Church Mutual, what the insurance industry is looking like going into 2023, and just what you'd like to share there.
Appreciate Thanks, Travis. And first of all, just want to congratulate you on the 40th anniversary. It's been an amazing journey for both Church Mutual and Church and Casualty, and you're our largest and our strongest partner, and we appreciate the partnership that we have, that we mutually share together.
Yes, thank you. Yeah. Likewise.
2022 for the industry, and Church Mutual was part of that, was a challenging year. Insurance companies make money two different ways, from the underwriting results and from the investment results. And I think, as everybody's aware, there were very little investment results last year. So we really needed to make our profit based upon underwriting results, and unfortunately wasn't necessarily a great year. So not only did we not have the investment income, but then secondly, this little thing called inflation hit. And I think it's kind of a worst kept secret that inflation and the role that plays on results, because let's just say that we have $700 million of loss reserves. If inflation goes up 10%, there's another $70 million that needs to run through the income statement which impacts current year results. So inflation played a role, investment results, and then this little thing called the polar vortex towards the end of the year really hit the industry hard. And Church Mutual was not spared from that. So we finished the year a little bit north of 100, very common to the industry. We did have phenomenal top line results, so we're still very happy with the top line production that we have coming in, and really the journey that we have for 2023 and beyond is going to be focused on reining in that profitability and making sure we're doing what's necessary, taking the proactive steps to ensure that that weather doesn't play as significant a role in impacting Church Mutual's results in the future.
Now, when you say we finished above 100, just for the layman out there, what does that mean?
Yeah, I'm sorry, great question. So in the property and casualty insurance world, we talk about a combined ratio. And in layman's terms, anything below 100 is great, you're making money, and everything above 100 is you're losing a little bit of money. So we lost a little bit of money last year. Overall, because there was some net income, or investment income, we had some net income, but you really try to make results on your investment results and on your underwriting results to get to the total net income result. And 2022 for the industry was a challenging year.
And so the thing is, surplus or policyholder surplus, that's strong, and that's kind of what is the lifeblood of an insurance company. And you guys financially are strong there. You have good surplus, good reserves is the other word for it. So why don't you talk a little bit about that?
Yeah, the benefit for Church Mutual, myself, I know Alan, we've worked at publicly traded companies, and the number one mission for a publicly traded company is to dividend as much excess profit as you can up to your shareholders. And Church Mutual, being a mutual-based company, doesn't have shareholders. Our owners, our policyholders are our owners. So when we do make a profit, that goes into our bank account and into what we call policyholder surplus. So our policyholder surplus remains extremely strong from all indications. It's higher than it needs to necessarily be to carry an A rating from AM Best. So we're very pleased with what we're carrying from a policyholder surplus perspective.
Great, great. Alan, you're the third attorney in a row to become CEO at Church Mutual. Why don't you tell a little bit about your background and then how long you've been with Church Mutual and the path forward?
Sure. No, and again, let me add my congratulations for 40 years. As we were kind of talking before we went on camera, just a remarkable achievement to for 40 years to your organization to be so incredibly successful for such a long time. So let me add my congratulations to that.
Thank you.
As far as my background, I've been in the property and casualty industry over 30 years, born and raised in Wisconsin. One of those probably few individuals who my undergraduate degree is actually in risk management and insurance.
The few, the proud.
One of yes,
Yes.
at least the few.
Yes.
After that, did go on to law school at the University of Wisconsin as well, and then directly into the insurance industry. I've had the good fortune of working with for multinational companies, for smaller companies, for stock companies, for mutual companies. And I joined Church Mutual about 8 years ago, and it was a real honor to join Church Mutual. As you know, you're proudly in place for 40 years, and Church Mutual is very, very proud of its 125-year history. They've had a great run. It was a great opportunity for me to join the organization and to be selected recently as the president of Church Mutual is an incredible honor for me, quite a commitment to our past and knowing that we have to carry forward and build the legacy for the next 125 years. So it's been a great ride, and looking forward to continuing to work with you and your team in the next 40 years.
Great, awesome. Church, it's in the name, Church Mutual, so there's always going to be that commitment to religious organizations throughout the nation. You're expanding into nonprofits. Why don't you talk a little bit about that? You have been expanding. It's expanding more in California as well. We're committed to that and the growth in that area. So why don't you talk a little bit about that?
Sure. While we were founded on insuring religious institutions, and we have every intention of remaining the preeminent player in that space, as we look forward, we believe there's some advantages for some of the reasons that Kevin mentioned earlier, for us to diversify our book of business a bit and adding some nonprofit business, which we have been in for a number of years already, to really kind of grow that segment is going to be very helpful to us as we again kind of diversify the operations. We will continue to be by far our greatest segment, and our largest segment will be religious institutions. But we think nonprofits are a great complementary piece to what we've already been doing in the religious space. I mean, many religious institutions have nonprofits that they're associated with. So we think it's a natural extension of what we've done since our founding.
Yeah, good. Kevin, why don't you talk also about, we have a new program. It just finally got filed in California recently. California's a tough state to file in, but Church Mutual Select, we've had success with smaller ministries, smaller nonprofits, those that fit that segment for online quoting, and just a little bit about that.
Yeah, thank you. CM Select has been a tremendous success for us. Predominantly an online-based application where it's easy to quote, issue, and a policy, and for those smaller policies where you don't have to invest a tremendous amount of time and energy, where you can quickly. There's a lot of logic that's in the background of the application, and you can get in there, quote a policy, issue a policy, and move on relatively quickly for those smaller premium accounts.
Nice. And you guys are doing a lot in the risk management space, either one of you, if you want to share about that, just kind of things that are new things, new technology, new advancements you guys are doing in that space. Anything you want to share there?
Sure. Certainly as, we look at one of the primary exposures today in the property and casualty market is exposure to catastrophic risk. When I started in the industry many years ago, we always tended to focus on hurricane and what the damage hurricanes could do. But I think as we've seen, and nowhere more than California, the nature of catastrophic risk has really changed a bit, its profile. Anywhere between, when I first entered the industry, I didn't think I was going to learn about things like atmospheric rivers,
Yes,
polar vortexes,
right,
derechos. As we sit here today, knowing that Yosemite had 15 feet of snow in the last few days. That kind of change in weather patterns and change in some of the exposures have really reminded us that we have to spend more energy and focus on risk mitigation techniques. And so what I mean by that is a number of years ago, we introduced a water sensor program that allows us to put sensors on various water piping in buildings so that if there is a leak or if there's a freeze that causes a rupture, we can identify those issues and give notices to our policyholders early on where we still have a chance to really mitigate the loss. Certainly that's helpful from an insurance company standpoint, but I'd say even more so from a policyholder standpoint. Even if you have insurance, the last thing you want to do is have your operations disrupted by your building being flooded out. One we also have in California is we have a relationship with a firm that's in essence a private fire company that if there's a wildfire in a given area, we can dispatch them to make sure that that given building is protected, and even in certain situations, spray a fire retardant foam on the building to help protect it in a wildfire situation, which obviously has been a challenging thing in the state of California. So we continue to believe innovation is part of being a successful company. We've created a part of our organization where we have a team of people who do nothing but focus on innovation and what we can bring to the market that's going to be valued by our policyholders and partners in the future. And you'll see more and more from that from us over the coming years.
And if I could just add to that, from a technology perspective, as Alan mentioned, the advances in technology have just been phenomenal over the past several years. So I think that our thought process is what can we invest in today to prevent losses tomorrow?
Right.
And we're hoping for a significant return. Additionally, we're invested in pull tabs, pull for police. So in situations where there's imminent danger, seconds count, and if somebody can pull that tab that's hidden under the desk or behind a wall and get the police there a few seconds quicker, we're hoping we can save lives and make a difference for our insured. So we're really excited about the advancements in technology and the ideas of how can we utilize that technology to prevent future losses. And that's a win-win.
And the polar vortex that went through the Midwest and the South primarily, right?
Right.
And I know us Californians believe we've recently been through a polar vortex. We actually haven't been through a polar vortex. We've been through a lot of rain, that's for sure, and a lot of stuff, but not a polar vortex. But what was fascinating to me is I was talking to somebody at Church Mutual, and they said that your customer service team physically called. What was the total number of policyholders?
It was, they made total, everybody, there was a group team effort that was involved, and we contacted over 60,000 policyholders.
In like 3 days. 60,000 calls in 3 days.
And visits.
Because when it comes to water, and we have this in higher elevations in California, freezing pipes are a big thing, a big concern for any insurance carrier, but it's just like, a lot of times, especially in the house of worship space, they're not there every single day. And so it's like, hey, we got to protect the pipes. We got to, let's help each other out together and try to help. There was a lot of claims, but I have to believe that 60,000 calls prevented a lot more. That's, I mean, that just is phenomenal. That's really, really cool.
Yeah, try to take a proactive approach.
Yeah, absolutely. Anything else do you guys want to share? That's kind of some of the highlights and stuff I wanted to go through. Is there anything new and exciting going into 2023 that we're already in it? But
I can defer to Alan, but part of the pressure that we face is, as an insurance company, are the limitations that we have from our reinsurers, and we rely upon reinsurers, which is basically insurance for insurance companies,
right?
And they're getting pinched pretty hard, and tightening up their standards and their pricing. And Alan's more connected to this than I am, but it's making our lives a little bit more challenging with the increased cost, with the increased terms and pressure that they have. So we're having to force us to make some challenging decisions as we continue to move forward. But Alan, do you want to?
Well, I just want to jump in here real quick. My understanding was, I heard this years ago. I think one of the former CEOs who you just had dinner with, Jerry Whitburn, said this, but it was like they went from back then in the early 2000s, somewhere to mid 2000s, the nation went from like 32 reinsurers down to like 6 or 8 now. Is that correct? Or no?
Well, it really depends upon the segment.
The segment of reinsurance, okay. But there's
certainly
definitely less than there used to be. Is that a fair statement?
And definitely over the last couple of years, I'll say for certain types of reinsurance, like catastrophe reinsurance, which is to address some of the items that we were talking about, vortexes and otherwise. There certainly have been cat reinsurers who, have significantly increased their pricing, and I'm not talking a few percentage points. Combined with that, you've had some cat reinsurers who've simply decided not to play anymore. They've decided not to deploy their capital. And that creates certainly some stress on the industry. Where I think Church Mutual is fortunate is, as we talked about earlier, the strength of Church Mutual and our longevity. That longevity and strength also gives our reinsurance partners some comfort. They know we know our segment. They know we're going to be in our segment now and forever.
Right.
They know that when they do a relationship with us, it's for a long term. The same way that we've been so fortunate to have a relationship with you for 40 years. We've had long-term relationships with some of our reinsurers. So the good part is, if there's a bump in the road, a tough year, we stick with them, they stick with us. So while it certainly changes the dynamic of the market, we're in a much, much better position than many other insurers. That we have long, stable relationships. We have an incredibly strong capital base that just positions us well to kind of move through these situations with there being bumps in the road and not real threats to our organization.
Yeah, that's great. And it's interesting because insurance across the board, like the price of eggs, the price of milk, everything, we're seeing an increase, and it's not just you're not picking on California, it's the nation, and it's a large part related to reinsurance and just the business of business is to stay in business, right? And so we've seen those increases, and my phrase that I've always said is, people say, well, are you cheaper? And I say, Church Mutual is not always the cheapest. Church Mutual is not around to buy market share.
Correct.
But I said, we're not the cheapest, but we're the most consistent. And I firmly believe that. Right. I should say we're one of the most consistent, just to clarify. So I can't guarantee that we're the most consistent. But I'd say in my 27 years of the 40 years you've been in California, 26 years, you're consistent. I mean, what's interesting is that I can go back and I can look at a policy from 10 years ago and see ebbs and flows and pricing down, pricing up. But usually over about a 10-year span, it's probably at the 10-year mark, it's probably about the exact same pricing it was 10 years ago. It may have, and over that 10-year span, it could have gone lower, it could have gone higher, but it's a consistent flow, and that's what I appreciate. It's frustrating for our sometimes for our producers and staff because I say this lovingly. I say Church Mutual is a company we can love and not love at the same time because you are so conservative and you are so consistent. And sometimes we just want to be able to, push the needle a little bit more than necessary. But at the end of the day, the business of business is to stay in business, and you're consistent, you're financially solid, you're that really strong basket that I talked about. So we're appreciative of that.
Well, and for us, I mean, we're always mindful that we are a mutual insurance company. We are owned by our policyholders. So for us, making sure that we're appropriately profitable, not overly profitable, but getting a fair rate of return is our profits are funneled back into our business. There are no stockholders. So as Kevin mentioned earlier, we're not paying out dividends to anyone. We're not doing stock buybacks. At the end of the day, any profits we make get funneled back into our business. That helps us generate some of those innovative things that we can then bring out to the marketplace. And hopefully for us, we want to make sure that we're, maybe not, if we're not the lowest cost, that we're the highest value that someone can have in our niche. Because I think, again, over 125 years, we've developed, really outstanding claims service. Our loss control is incredibly knowledgeable about the religious space. To me, it's remarkable to have, a team of people who understand a niche this well. There's very few things they have not seen before in the religious space, and I think that really helps us bring a value to the marketplace.
Right. And I think it's a natural segue, too, for the nonprofits. I mean, like you said, a lot of ministries have nonprofits, food banks, thrift stores, et cetera. It's a natural segue to expand into that. We're still, as the founder, my father-in-law, Richard Riddle, always said, and people in California are familiar with In-N-Out Hamburger, it's burgers, fries, shakes, and sodas. And it's like there's no chicken sandwich and there's no like salad. It's just like we're going to do this and we're going to do it really well. And that's what we believe. We're going to focus on what we do really well, and we're just going to keep doing it really well. And we appreciate the partnership. We appreciate you guys coming out here for the 40th. And we look forward to celebrating later today, and appreciate you.
We appreciate you. Thank you.
Thank you.